I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Ballara, and this is the Know Your Why podcast. Today I'm here with Trevor Thompson. Trevor is an accredited investor participating as an LP in 18 deals, 15 of them still active, and has now become a GP I'm assuming if this is up to date with one deal. But I want to let people hear your story through your words. So first, thanks so much for coming on the show this morning. I really appreciate your time.
Yeah, no, it's my pleasure. Excited to be here. So
Awesome.
Very interestingly, I started 23 now, because I've been let go for a little while from iFly. And our very first team meeting, the owner gave everybody a copy of Rich Dad, Poor Dad. And I've always had some interest in real estate, but never really thought about it as investing in real estate. And so even though, I didn't follow everything in the book, it kind of opened my eyes and I went, wow, this is incredible. And then I did what everybody else did. I went back to my corporate life, building my career, working 80 hours a week, doing everything. And it was just, paid no attention to investing in real estate, didn't look at it more, didn't think about it more. And then fortunately, we got bought out by a private equity company, and I got some money. I had some stocks in the company. And so I went, well, if there's ever a time to start passively investing, this is it. Sure. I started going to the weekend seminars, the guys that give us $50,000 and will tell you how to buy an apartment or an office building with your credit card. And I went, well, that doesn't quite sound right. I went to about 3 of those. And then I found a local one. And the reason I liked it is they were local. Their motto was Texans investing in Texas. So I thought, okay, I can go to meetings. I can see these people. That will accelerate me. And, I wasn't even aware how much of a team sport, commercial real estate investing was. I just, knew that I needed to be connected with a group of people. And so I joined that group, started, being obsessive, just my nature, started learning. And, 5 years later, still learning. But I quickly jumped on passively investing, probably too early. In hindsight, I wouldn't have invested in those 2 first deals, knowing what I know now. But again, I learned a lot. And, I didn't want to wait.
Yeah, sure. Well, I mean, there's a lot to be said for getting started. Or taking action even, whether you're 100% ready, which probably nobody's ever 100% ready. So tell me that sort of time frame again. When did that start for you?
So that was in 19, let me just think, it was 5 years ago now. So I can't even do my math.
So 2017?
Yeah, 2017.
Okay. And so you started with these, I understand. I know exactly which weekend courses you're talking about. I've been to them as well. But then you found, kind of a local real estate meetup and invested. So I think it's important for listeners and other people considering passive investing to understand, sort of why you said you invested too soon, or, might not have invested in those first couple deals. Would you mind walking us through, kind of what?
Yeah, to be honest, I learned only enough to be dangerous, as I refer to it. I learned enough. I learned that I wanted to do it. And again, the first 2 deals could have been great, and I might not have known the difference. But what really happened was I didn't know enough to really understand the scope of the deal. So for example, in Texas, you've got to watch out for property taxes and insurance. And then you need to make sure that the sponsor has enough CapEx in their budget and some reserves for moving forward. Both of these projects underestimated property taxes, insurance, and didn't have enough CapEx built into the budget to execute the entire plan. And, I just didn't know enough to know that, right? I
Right.
just had no idea. Now, of course, I have a great idea, and that's some of my first questions for any Texas investment, just because that's a phenomenon that's Texas centric. We've had a lot of disasters in Texas, so our insurance is high. We've had really aggressive counties because there's no state tax, so they get all their money from property taxes. So they aggressively go after you. And the two projects basically, I didn't lose my money, which is, again, that is sponsor's first responsibility. But it would have been nice to make a little bit of money, my first two investments. But I learned a ton, just by sort of going through that experience. And both of them went fairly quickly. The first one in less than 2 years, and it was basically they knew they were trading dollars, and they got an unsolicited 1031 exchange offer, all cash, close in a short period of time. And they pulled the investor, said, listen, we're up $1,000, down $1,000. We're not making money any month. We suggest we take the offer. And of course, everybody voted yes, and they took the offer and got out quickly, and everybody got their money back.
Yeah. Well, yeah. And that's, definitely you go into these investments hoping to make lots of money, but not losing your money at least is a big step. And the learning lessons involved. And those are great points in that you need to know what are the, even as a passive investor, be good to know what are the intricacies of whatever market you've decided to invest in. So, you as you mentioned, in Texas, property taxes are very high. I used to live in Houston. I owned a house. I was shocked by what the property taxes were just on a single family home. So you can imagine the multiples that would be on a multifamily property. So it's important to kind of understand all of that and understand that your sponsor does have those things calculated correctly and the reserves to cover, kind of any issues that may come up, for sure. So those two, didn't go the way you wanted them, but you stuck with it. You sort of saw the value
Definitely.
in it, right?
I stuck with it. I've had another third one go full cycle, and this one was a slightly different investment. I was just a pref position with no upside, so in theory that's kind of like a loan. Right. And it was an apartment to condo conversion. And again, it struggled because it was an apartment to condo conversion, and then COVID hit, and you couldn't evict. So you bought a non-performing, didn't break even apartment complex, and now you can't evict the tenants, and now they're even empowered not to pay the rent. So it was super stressful. 18 months they didn't make a pref payment, but very fortunately, real estate prices also skyrocketed in Austin. So something they were selling $265 pre-pandemic sold for $465 post-pandemic, so that saved the project. And again, real estate appreciating is something investors need to realize, and it certainly saved the day here. And they ended up, even the upside people made about 11%, which is still okay. All things considered, considering they had to carry the project for about 18 months with no movement forward. It was a really good one. And then I have another investment going full cycle, and fingers crossed, if it goes full cycle, it will be a 3x of my money in about 2 years, which is like home run out of the park, right? It's and you should not expect that to happen on a regular basis. That's a phenomenon based a little bit on the crazy market going on. So they shouldn't expect that. But I'll take it. Thank you very much, and it will certainly offset some of the other things that have happened.
Yeah. It's really actually a good little snapshot there of kind of all the things that can happen, and it's a bit of an argument to think about diversity, think about kind of you can't use one single investment as your marker as for how all else will go, right? Because you have some that didn't make you any money, but you got your money back. You have one there that you mentioned that you were as in a pref position, which for people that maybe don't understand, do you want to kind of walk through that, how that
so
this
works?
One
was slightly different. This was a pref with no upside, and it was paid monthly. So in theory, it's almost like a loan. It was an 11%. So you're making just less than 1% a month, and they actually paid it monthly. And it's a way that sometimes they do because they can't borrow enough money. And so basically it's expensive debt still and compared to regular debt, but it's inexpensive debt compared to, making investors 16, 17, 18, 19%, because there is no upside, right? You're purely just going along. And I have a couple of investments that way, just sort of to balance out my portfolio. And it's a really good mechanism if you want to use your retirement funds, for example, keep them a little more secure. That okay, I'm not going to shoot for the home run on this one. I'm quite happy with a double. And because if you can do a double over and over and over again on your retirement money, it can grow quite quickly.
Mm-hmm. Yeah, and so you have your pref equity type of investment, and then you have this one that's 3xing in 2 years. Those are all things that happen for sure, and obviously in that small snapshot you can see that's not going to be the same every single time, right? It's not you're not going to get 3 times your money on every single investment. You're not likely to make no money on every single investment, but what's nice and not that it can't happen, but you didn't lose money.
That's correct. Yeah, that's correct. And
that's a huge point, I think, for people that investing in real estate, because, if you have a stock portfolio and you look at right now where that's at, it's probably, if it's anything like mine, down quite a bit. And so there's a lot of, obviously a lot of things, a lot of variables that can impact what your returns are. But at the end of the day, real estate is actually quite safe, and generally, even when things don't go well, you're likely to at least get your money back and maybe a little bit on top of that.
And you get some depreciation as well.
Right.
So, so I had other things that were making income on my passive income. So even though these made money, they showed paper losses of passive depreciation income.
Yeah.
And so neither of those first two did accelerated depreciation. They didn't do it, but other ones have. And but there's still depreciation, even if you take it the normal slow way. And so there was tax savings, right? So at the end of the day, in theory, yes, I did make money because I was able to take those passive losses against my active earnings, because at the time I still had a W-2 job. And so in essence, I did make money on the total overall portfolio. And then, of course, that money comes in as capital gains versus ordinary income. So there's lots of, so even in theory, it sounds, oh, we didn't make any money, I shouldn't invest. If you look at the tax advantages of real estate investing on a whole picture, you actually can do quite well, even when you don't, in theory, make cash money.
Right. Yeah. Yeah. Point being, there's a lot of
no idea, right? No idea. I did that first year's income tax, and and it was like, oh wow, but then when I did it, I was like, oh wow, this is way better than I thought. Like I got a refund versus paying, and then I actually analyzed why, and I did have one accelerated depreciation that happened at the end of that year as well, and so that really helped. And that was also the year I lost my job. And I actually became active in a deal. I was passive. I volunteered as an asset manager, so I was able to switch my tax status to professional real estate agent because I'd gotten let go. And even though I was collecting severance, there was no time to collect the severance. And so all of these things multiplied together to actually be a pretty big win. Right. And not everybody will get that win, right? Some people still want to keep their jobs and just invest. You don't have to get active. It just gives you that next level.
Right. Yeah. It gives you the ability to use those depreciation losses against any W-2 or active income that you have. So we've actually had a CPA on and talked a fair bit about that, because it's something that's a very, very powerful tool to use. But yeah, you have to obviously speak to your own CPA and have one who's versed in real estate so that you can make sure you're not doing anything that's going to bring the IRS to your door. But yeah, the point is there's a lot of angles that real estate can help you in terms of, sort of creating and growing your wealth. So it's really a very powerful tool. Well, let's talk a little bit here about that transition from passive investor to active investor, and kind of what steps did you take? How's that work? How did that start, and now how's that working for you?
I started volunteering as an asset manager for one of the properties that I didn't make money, that was struggling, and so I went and volunteered my services, and not everything went how I would hope, and we had a disagreement about 10 months into it. And so when there's a disagreement and you're a volunteer, you're the first guy to go, which is okay. I was not in charge, and I still, in hindsight, I think the direction I wanted to go was the right one, but that's, anybody can be right in hindsight, right? I could have been totally wrong.
Right.
And again, it gave me that advantage. And then I decided, okay, I'm going to switch to active. And I was shocked how hard it was. I was shocked, like I couldn't find a property. I was making offers. I couldn't get close to even whisper, let alone people that were paying 10% more than that. They call it asking price for those that don't know what whisper is. And it took me a long time to get there. And then, a lot of people don't talk about people get paid to do things on active because of the risk. And unfortunately, my first GP deal, I suffered the risk. We had a very large deal in San Antonio, a loan assumption. And after 6 months, we never qualified for the loan assumption, no matter what we did. And we ended up losing a total of $350,000, which 75 was mine. Again, a very hard lesson moving, so I had a hard lesson on my first passive, and I had a hard lesson on my first active. Yeah. But again, I learned so much. And there are risks when you switch to the active side, right? The passive investors, they don't have the risk, right? The only thing they're risking is their investment capital. And on that deal, all the passive investors got their money back. And it was only us sponsors that lost any money. And we're working diligently to get another deal. There'll be a win, and I'll end up way ahead in life. I'm still not thinking I made the wrong decision. I'm not ready to throw in the towel.
Sure.
It's quite interesting that it accelerates your learning. Is all it does. Is it accelerated my learning, and taught me some lessons. And you mentioned I'm a GP in one, and I'm a very small GP in one. And then I'm actually now doing 2 more deals. They're 506Bs, so I can't talk about them here right now. But I managed to join somebody else's deal and get a little larger position. And I'm going to be the boots on the ground part of the asset manager, which means I live the closest to the property. So I'll help them execute the plan. And then I have another property that we just got under contract. In fact, this week we're doing our due diligence. And so it's starting. I'm starting to get the traction. After all that hard work. And at the end of the day, I think it's made me a better sponsor because I've learned so many things. I didn't get lucky and have a few home runs out of the gate. And so I learned, what is it like to be a passive investor? What is it like to be a passive investor on a deal that's struggling? What is it like to be a passive on a deal that's going well? In my variety of passive investments, some there's no communication. Some there's a lot of communication. Some are just in the middle. And so you learn what should I be as the sponsor to satisfy my investors, to make them feel comfortable. So it's been great.
Yeah. Good. I mean, and it's true that everything's a learning lesson. Everything's, kind of part of the process. I wanted to kind of just touch on, what you mentioned about sort of losing that money on that deal that fell through. I think one of the things that maybe a lot of passive investors don't know is that generally when we're working through getting a deal under contract, you have to put down a deposit, which I think people probably know you have to put down a deposit. What they probably don't know is that in a lot of cases, especially with this having been such a seller's market for so long, in a lot of cases, what you're doing is you're putting down what's called hard money. And essentially it means as soon as you put down that deposit, you don't get it back. No matter what happens, basically, you don't get it back. So there is a large risk of a lot of money that, if the deal doesn't go through, those sponsors lose whatever earnest money that was hard. They lose that money. It's just gone. And so, unfortunately, you experienced that. I know, there other people have as well. It's a very challenging and stressful position to be in, because it's like you're working so hard to build this business, and then all of a sudden you get you have that setback as a big chunk of your own capital for building your business is gone. And so it's when you think about, from a passive investor, when you think about, there are some fees that the sponsors get. This is why, right? This is those risks that you're taking on, the amount of work that it takes to get a deal under contract. You said you worked for 6 months on that one, and it didn't actually come to fruition, and you lost your earnest money at that point. So there's some significant challenges there, and that's sort of where that sort of extra bump in fees and the their ownership percentage comes in, and that's the reason for it, right? If you don't want those risks, then go ahead and be passive, and it's a perfectly good way to make money still. So it's and quite honestly, probably a lot safer, I think, to be. People don't necessarily look at it that way. That because you are investing. You're investing in someone and trusting them, but basically you have a lot less at risk likely than that sponsor did to get that deal under contract. So as you're moving into being more of the active role, and is it your goal is to be, sort of on the asset management side? Is that where you see your role fitting?
Yeah, that's because, again, I opened and ran small businesses. I like running businesses. I like incremental improvements. I mean, all the things I did through my whole career are all what an asset manager does, and I enjoy that part of it. And it's not my goal to do that forever, right? My goal is to do it on a few projects, get pretty good at it, and then be able to. That will let me manage people that are doing that. So I could be a lead on a team where, and I call myself young and up and coming. I'm not young, but, I'm a new person in the game. And so I'm willing to put the sweat and the hard work into it to master the skill. And I've spent a lot of energy learning it and studying it. And, I volunteered for it. And then my goal is to ultimately get to where I can call myself proficient in it. And proficient in it means, I think until you've actually done it, you just, there's no hope of being proficient, right? Mm-hmm. Until you've actually been there every day. And in fact, even the one I volunteered, they ended up firing the property manager too. So I self-managed a deep value add 176 unit. So you want to talk about learning everything, right? I was the property manager company, along with looking at the investor side. I mean, I did everything from sweep the parking lot. And the reason I swept the parking lot was I had work that needed to be done. And I couldn't fix the AC, but I could sweep the parking lot. So if I swept the parking lot, 2 guys could go fix AC units. It was just what had to be done to get our plan executed. And it was okay. And then once I get more comfortable, then I'm doing it all locally, so within driving distance is my goal. And then as I perfect it, then I could, perhaps do it in other markets. As long as I had a person that was boots on the ground in those markets, then I could help direct them. And I wouldn't have to go, on a regular basis. I would still go, because I still think everybody should go to their asset, that their asset manager, and spend some time, surprise visits, planned visits, night visits. All of those things should be done by any sponsor.
Yeah, it's totally agree. And it's a great, kind of rundown there of what, of even just a small part of what's involved in being, kind of the asset manager. You're really like a problem solver. You're putting out all the fires. You're addressing whatever is as sort of most pressing at that moment, and then trying to keep the asset on track so that you don't have as many fires to put out, and kind of get it in the right direction. So asset management is a challenging role to be in. And it's, I agree. It's it's something that you have to do to get proficient at. And then the idea would be, okay, now I can hire other people and essentially, put them in that role, kind of hire yourself out of a job, and but you're still going to then be managing those people as your portfolio.
Or partnering myself out of a job. Again, right. Somebody who this is their first or second deal, wanting to get, into a deal. There's lots of people out there that are eager to put the sweat equity in to learn.
Yeah.
And it's an important part of this whole process, and that's the beauty of it too. There's such a team sport, there's so many people, you can get those kind of things, right? And even though I've been a successful businessman all my life, I was lucky to get that volunteer role. Even though it didn't go the way I planned, I'm very fortunate.
Yeah, they're all lessons to be learned. So everything, if you look at it, it's a great attitude to have. If you look at it from that perspective, that everything that's happening is teaching you something, and then you can actually grow from it and take it and sort of improve with each deal. So a really great perspective to have. Let's switch gears here. I'm going to ask you the questions that I like to ask every guest as part of the show. And so the first one is based on the name of the show being Know Your Why. What is your why? What's driving you? Kind of what keeps you going and gives you that willingness to volunteer to be the asset manager and all of that. Really, what pushes you?
Yeah, and it's very interesting. I never thought I'd be this passionate about real estate. I never did. And I never even thought when I first started that I would find a why. I came from a career that I had a big why, and so my why is I want to create better places for people to live. My goal is to create a place for people to live that don't say, come over to my apartment, say, come over to my home. That is huge to me, to make people feel like it's their home. I also want to create a place where the team that works there gets fulfillment in their duties. They feel that they are contributing to this environment of making it a home. And the concept that those two happen, the third thing happens, which is to take the investors that have entrusted me with their funds and make them good returns, which in turn allows them to go do their why, which of course is very personalized, right? It could be retirement, it could be putting kids through school, it could be anything. So it's kind of the full circle of life, and it just sort of came to me one day that, oh wow, this is all the pieces. And until I actually put it together, it was hard to articulate it.
Yeah, no, it's true. It's your impact can become quite wide when you think about it that way, and you're trying to do the most good you can for each of those people. There's the investors, you mentioned the investors, the tenants, and your
and the team on site. They're often a big forgotten portion of it. And I don't care what you think. Without the team on site, you could not do either of those. And so having them feel fulfilled, everybody just wants to feel fulfilled, and that they can do a purpose in their job. And nobody minds working hard. What they do mind is being unappreciated, overworked, stressed. And that's, I think, it'd be the hardest thing to get done, because you've got the pressure to make the business successful while you're still trying to make them feel empowered.
Yeah, no, I think it's a great point that the team is this is certainly not something you can do on your own. And that on-site team, the property management group, all of the vendors that go into making these deals work. I mean, there's a lot of people behind the scenes that essentially don't get really any sort of recognition. It's people put up their social media post about their new deal, and it's like nobody's like, and thank you to my insurance guy, or whatever it is. It's just there's a lot of ancillary parts that go into it to make it happen that you couldn't do without them. So it's true. It's actually a really, really great point. I'm glad that you brought that up. Second question for you: what is something about yourself that isn't common knowledge? Maybe it's a special skill or a hobby, something that people can get to know you a little bit better.
Yeah, so most people wouldn't think I'm a headbanging rock and roll guy. So,
awesome.
I've got tickets to go see, a reunion tour. So Motley Crue, Joan Jett, Def Leppard, and Poison. I've got tickets to see Rob Zombie, Slipknot, Rammstein. So nobody would think that this bald old guy is a heavy metal headbanger.
That's amazing. That's even Rammstein. That's haven't heard that in a while. That's my brother was a big fan. That's pretty funny.
Yeah, and I'd never seen them, and they of course got canceled with COVID, and then it took a while. So this was the ticket I bought that got canceled with COVID, and I've always wanted to see them. I've just heard incredible things.
That's awesome. I love music and live shows and stuff too. So I have actually seen some of those bands in concert, not in a while, but yeah, that's a pretty cool sort of throwback set of groups.
Yeah. I'm also going to see Weird Al Yankovic because my wife loves them this October, and I still see some not so crazy stuff, but that's not as unusual.
Yeah, no, that's amazing. When people hear this, what's the best way for them to reach you? How do you want to be contacted? And we'll put whatever you want in the show.
LinkedIn is great. K. Trevor Thompson. Facebook, K. Trevor Thompson. My website is Niagara-investments.com, and Niagara because I'm originally from Niagara Falls, Canada. And then my email is pretty easy, ktt@niagara-investments.com.
Okay, awesome. And we'll put all that in the show notes for you too. Final question. What piece of advice would you give to someone who is getting started? Whether that's, you can choose whether that's as an active or a passive investor, kind of what would you tell them to get them headed in the right direction?
Yeah. So anyone you contact them with the mission, what can I do for you? Not what information can you give me? What can I do for you? How could I help you? What would you like me to know or learn from you? Put that back in the sort of, I call it the servant sort of thing, like because people will respond much better to that than, I don't know you, but would you look at this investment and tell me if I should invest? I'm not going to do that.
Yeah. Yeah.
But if you want me to help you walk through it and understand it, that's a different question.
Right. Yeah. It's approaching it with providing value and being humble and realizing that, people's time is very valuable, and that, that's really what you're asking for. You're asking because, if you're asking, like you said, can you look at this deal? Like if you're asking someone to look at a deal for you, they probably underwrite all the time, and it's something that they actually get paid to do. And so you're asking for their time, and you're asking for them to, sort of give that up for you. So it's important to be cognizant of that and appreciative. So I think that's a great piece of advice for those that are beginning. Well, that is, you did great. All those questions were, it seemed you had no difficulty answering those.
They're very front of mind.
Yeah. Well, thank you so much for coming on the show. I really appreciate it. I appreciate hearing your story. I think, kind of sharing what you did about some of those deals that didn't necessarily go well is also really important for people to hear. So thank you for that. And thank you for your time.
No, my pleasure. It was great to talk.
Yeah. Awesome. All right. Well, with that, we will go ahead and sign out.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.